Welcome to the Capital News. I'm your host, Alex Karitis. Today is Tuesday, July 7th, 2020. Thank you so much for joining me. The title of today's podcast is a question: Corporate Debt to the Rescue. I wanted to touch on this a little bit yesterday, but got on a little bit of a rant and tirade like is normal around here. So I didn't quite get to it, but I want to make sure that we focus on this today. I also mentioned that the government, the Treasury Department, and the SBA, the Small Business Administration, did release some information in regards to those PPP loans that have been released. So we are going to highlight some of those key points of that report. I will also link those reports, that data, in my write-up that you can find at thecapitalnews.com or wherever you listen to the Capital News. First to market performance. The major indexes here in the U.S. did have a down day. Is that surprising? I don't know. Isn't it the law that they only have to go up? So I guess in that respect it is a little bit odd, but when you have these quote-unquote winning streaks that are lasting days on end here, it's not surprising to have a little bit of a pullback. But nonetheless, futures trading, Dow Jones Industrial Average is flat, the S&P is up barely, and the NASDAQ 100 is trading up about 0.5%. The cash trade in Japan is down 0.5%. Across the pond today in Europe, all red, anywhere from about 1 to 1.5% down. The cash trade in Australia is currently down 1.3 percentage points. On the commodity front, we have WTI trading at $40.49 a barrel. WTI $40.49 a barrel. Brent at $42.96 a barrel. There was a surprising build in crude inventories here in the United States, so a little bit of a pullback, but still hovering around that $40 a barrel mark for WTI. Natural gas is at $1.87. A lot of this is on the heat wave that we are witnessing, so there's a bigger demand right now for natural gas. You've got all those air conditioners on because it was just a couple weeks ago, folks, that natural gas prices were below where they were when the markets sold off drastically back in March and April. So it's been quite a bounce back in the natural gas price. Gold and silver continue their rise. Gold is right now trading at $1,793 an ounce. Silver is at $18.29 an ounce. Uncle Sam's 10-year Treasury junk note is yielding 0.65%. Now, to some of this corporate debt nonsense. Now, typically, when you look at this data, you will see a cyclical trend to this. This is not surprising. This is part of the business cycle. So you're going to see these peaks and troughs. Now, this money, this debt, a lot of this can be used for capital expenditure. This can be used for investment from corporations. Well, those capital expenditures are a factor when it comes to calculating our GDP, gross domestic product. You have government spending, you have consumption, you have investment, and you have net exports. So when we look at this, one would expect to see, once you are in recession, you're going to see some type of top to commercial and industrial loans, to the amount of debt securities, which means corporate bonds that are thrown out into the market. Because typically what you are going to witness in a recessionary environment is deleveraging. Getting rid of your debts, paying down your debts. That's what's supposed to happen. That is the natural process. That is corrective. That is the right course of action, and that's why corporations do that. But this time, that's not happening. And when you look at the historical trends, when you look at those past cycles, you will see that commercial and industrial loans will peak either shortly prior to the onset of a recession or within that recession. Once everybody's aware that we are in recession, then those corporations say, okay, I need to delever, got to lay people off, got to pay debts off, got to get our balance sheets in better order. Well, that's not what's taking place now. It's the opposite. And just with just about every other piece of data that we talk about here, it's insanity. Whether you're talking about the NASDAQ making all-time highs with a vertical increase, whether you're talking about the M2 money supply, money stock, that increase is a vertical line. Whether you're talking about the Federal Reserve's balance sheet, that is a vertical line. The list goes on. And now we can throw into the mix commercial and industrial loans, which is now at an all-time high of $3 trillion. This is just commercial and industrial loans. We haven't even gotten to corporate debt yet, those debt securities. This is just commercial and industrial loans. $3 trillion. Okay, this is quarterly data. So this only gives us, this is actually monthly data I have here. So if you look back to February of this year, we're about $2.4 trillion. Now, over the course of only a couple months, because this data takes us to May, you're at $3 trillion. So an increase of $600 billion basically overnight. Now, for a little context, a little bit of perspective, this is $600 billion just over the course of a few months, okay? How long did it take corporations to have $600 billion in total? Well, you don't get to that figure until the 1990s. That's how far back you got to go. You got to go all the way back. That's when it started at $600 billion. That was the total for the United States commercial and industrial loans, $600 billion, late 1980s, early 1990s. Now we're doing that in a few months. You understand why I call this insane? Because it is. And people don't seem to care. $600 billion just for commercial and industrial loans. Let's go back just, a decade ago during the Great Financial Crisis. And TARP, the Troubled Asset Relief Program, right? We got to do something. Like President Hoover said during the Great Depression, during the stock market crash. Got to do something. Well, they did something. They passed TARP. What was that, an $800 billion monstrosity? Because they just needed a really big number to get a handle on things, to soothe the markets. Somebody is in control here. We don't have the money. We don't really know what we're going to do with it, but we're going to authorize $800 billion because it's a big number. That was during the depths of the Great Financial Crisis. That's when major investment houses were collapsing, were filing for bankruptcy. And were going out of business. Not just filing bankruptcy, they were gone, they were liquidating, they were out of business. Now, over a few short months, commercial and industrial loans are up $600 billion. And this is just updated for May. So let's see what happens for June and July, because I imagine this number is going to get bigger. Now, if we just look at debt securities that have been issued, again, we are also at an all-time high. $6.7 trillion. $6.7 trillion. This happens to be quarterly data. And this was continuing to make all-time highs to begin with, because that's what we do. We just accumulate more and more debt. We just throw more and more debt out into the system. This whole rise in debt securities is what we have been talking about on this podcast for months, with all of the financial engineering that has been taking place since the great financial crisis. Because there hasn't been that much economic growth. We all know this. While it may have proven to be the longest expansion, business cycle expansion in the history of the United States, it was also the weakest expansion. And that's because all of this funny money that was printed from quantitative easing, from the Federal Reserve printing money out of thin air, throwing it into the system, these corporations gobbled it up. And instead of investing in themselves and investing in the economy, they took a lot of this money and they said, well, you know what? We could make those long-term investments for the true betterment of our corporations, for our economy. But wouldn't it be easier and wouldn't it be more fun if we just financially engineered our balance sheet and with it our stock price? Wouldn't that be better if we did that? And our income statements, wouldn't it just be better if we did that? Wouldn't it be much easier? And we'll make a lot more money because our compensation is tied to our stock price performance. And so if we can buy back our shares, it'll make our earnings look better. And if our earnings look better, then our share price is going to go higher. And if our share price goes higher, then we're going to be better compensated. That's what took place. And when you look at the data as to why the stock market did what it did over the past 10 years, it was because the net buyers of shares were the corporations themselves. Everybody else was still abandoning ship. You got a huge demographic problem in this country and really globally of people retiring. So they're taking their money. They need the savings. There's a lot of uncertainty out there, especially now with COVID-19. People want the cash. Even though they're not going to get much of anything by putting it in a bank, you're not going to lose it either. Now, of course, the effects of inflation you will, but you get my point. It's not going to be in the stock market subject to major sell-offs like we just witnessed a few months ago, which is likely going to happen again in the not-too-distant future, if history is any indicator, because what we are witnessing is very reminiscent of what took place in the 1920s and the 1930s. And continuing to gloss over these structural issues with more debt and thinking that that is the solution to a problem that was caused by debt is by definition insane. This is insanity. So that's just the debt securities, $7 trillion. Nearly $7 trillion. And again, this is updated quarterly, so we got the first quarter data. We'll see where we stand afterwards. And of course, because of what the Federal Reserve is doing in conjunction with the federal government, right now, really, I want to focus on the Federal Reserve with all of their emergency facilities that they've thrown out there. Well, now all of these corporations know that they have a backstop. They know that Jay Powell and company at the Fed are going to buy up these bonds. They'll either buy them directly from these corporations on the primary market, which means if Microsoft wants to issue debt, Jay Powell and company will just buy it right up directly from them, or they could buy it on the secondary market, which would mean, okay, I think that would be a good thing to lend Microsoft money, so I buy those bonds, i.e. lend Microsoft money, and then I say, well, you know what, I don't want it anymore, and the Federal Reserve is going to give me a better price, So I'm going to sell it to the Federal Reserve. That's the secondary market. Okay, and that's what we were talking about last week, and yesterday I brought that up again as well, because that list was released by the Federal Reserve on the secondary market, those corporate bonds that they were purchasing. Volkswagen, Toyota, Ford, BMW, Amazon, Apple, Microsoft, Verizon, AT&T. Some of the largest corporations in the world, if not the largest corporations in the world. They don't need any type of bailout. I bet a lot of the investors, a lot of those people who held those bonds didn't need the bailout either, but they got it. They got it. Why? Because they can. Because nobody is going to check the Federal Reserve. Nobody is going to call them in and really question what they are doing. So they're going to continue to kick the can down the road as far as possible. The day of reckoning is going to come, and it is going to be so devastating, I can't even put it into words. Because nobody wants to say enough is enough, that we cannot keep doing this to ourselves. So the market will have its day with us, because it always does, and it will be a brutal and rude awakening. Believe me when I tell you. Okay? So now when you take all of these things in aggregate and you look up debt securities and you look up the loans, you are now at $10.5 trillion. This is also a record high, and this is also another vertical move on this chart. $10.5 trillion debt securities and loans. Quarterly data. $10.5 trillion. So again, a little bit of perspective, right? A little bit of perspective, a little bit of historical context too. Never been this high. Look at GDP. Our GDP is about 20 trillion. So now corporate debt is half the economy. Corporate debt is half of the economy by GDP. How sustainable do you think that is? Now, people make the argument that there's nothing wrong with it. People make the argument that it's perfectly fine, that it's completely sustainable. I don't agree with that. I don't agree with that. If that's the case, then it goes right back to my other point that I have been making here over the past few weeks. If that's the case that debts don't matter, if that's the case that deficits don't matter, if that's the case that printing money has no price, has no consequence, has no negative side effects whatsoever, then we don't need to pay taxes anymore, and we don't have to pay our bills. They'll do it. The Federal Reserve will do it. Congress will pay for them. The Fed will pay for them. You don't have to. Now, I just, for the life of me, don't think that that's going to happen. At least not for the average guy. If you're well connected, if you're a major corporation, yeah, you're going to get billions of dollars. You're going to be able to kick the can down the road. You're going to be able to buy back your shares if you want to financially engineer your share price so you can take home a bigger compensation package. Because this is the United States of America, a banana republic. That's what we do. $10.5 trillion. No end in sight. The other thing you have to look at when you're looking at all this as well are corporate profits. And I'm looking right now at corporate profits after taxes. All right, $1.6 trillion is where we currently stand. This number peaked, ladies and gentlemen, all the way back about the third quarter of 2014. 2014, that's when corporate profits after taxes peaked. Wouldn't you think, if you were told that we were in the midst of the greatest economy ever, that corporate profits would have peaked this year, last year, during the Trump administration, because he's the one, Thunder Thumbs is the one claiming that this was the greatest economy ever? Wouldn't you think that corporate profits would still be going up or would have peaked during his administration? No, that's not the case. They peaked in the third quarter of 2014. So despite all of those regulation cuts, despite all of the tax cuts, couldn't do it. Despite all of the financial engineering that took place, and this spans the Obama administration too. Okay, this isn't about politics as to who did what, whether Obama was right or wrong or Trump was right or wrong. I'm just telling you the data. Not the greatest economy ever, not even close. This is a con job. This is a mirage. It's smoke and mirrors. It's all debt. It's all debt. And the piper's going to get paid, and it's not going to be pretty. So you got corporate profits after taxing. It's peaking back in 2014. Despite all of the stimulus, despite the deficit spending, the $1 trillion deficit spending before COVID-19, corporations still couldn't get those profits to make all-time highs. Still couldn't do it. Quite astonishing, isn't it? So that's that. I wanted to throw that out there for a little bit of perspective. I mean, we throw these numbers around now, trillions, like it's nothing. Like it's nothing. And it really is when you look at those commercial and industrial loans, the increase of over $600 billion over the course of a few months. It took this country over 200 years to get to the $600 billion mark. Now we're doing it in a matter of months. At a time when you typically see corporations delevering, which is what they're supposed to do. Getting their financial statements in order. Getting their financial health in order. That's what's supposed to be happening. It's completely reckless. Everybody has trust and confidence in the Fed that they're going to backstop. So, well, if they're going to buy everything, well, then we might as well issue as much as we can so we can continue to kick the can down the road. So we can continue to prop up these zombie corporations with this number growing by the day. And not to mention the countless number of small businesses that are no longer in operation because the government was too slow to act to help them. And of course, you go out of business, you go out of business. That's how it works. Okay, I'm not saying the government should come in here with these bailouts. I don't like the bailouts for anybody. But if you're going to help somebody, shouldn't you really help the little guy as much as possible and as quickly as possible? Well, that didn't happen, and it's not happening. But they can print and throw money out there to the largest corporations in a heartbeat. No questions asked. Very little oversight, if any. But here we have the SBA, the Paycheck Protection Program, the PPP Report. These are approvals through June of this year. Okay, and again, I will link this in my write-up. So here is a summary of the PPP approved lending. This is about 18 pages long. I'm not going to go through all of it, but I did want to highlight some of these points as noted in the report. So the loan count is about 4.9 million loans, representing about $521 billion. And that is coming from about 5,500 banking and financial institutions. So about 5 million loans are out there, $521 billion. It's a lot of money. Loan size distribution. Now, when it comes to the loan count, the vast majority are $50,000 and under, or $50,000 to $100,000. When you're looking at loan size, $50,000 and under, you got almost 3.3 million loans, representing about $58 billion. All right. Now, if you want to look really at the percentage of the amount of that 521 billion as a fraction of that, as a percentage of that, the bulk comes from loan sizes from $350,000 to $1 million. Okay? That represents $113 billion, which is about 22% of the total, which again is about $521 billion. Very interesting report. Again, I'm going to link it. Take the time to look through it. They did a good job of highlighting these key points. They also post the companies that receive the money, and I know there have been other reports out there written. We'll maybe get into those later in the week, because a lot of these companies that receive this money are not small. A lot of companies that are receiving this money are companies that, and have some personalities out there that you'll see in the media who, they go against big government, all this, that, and the other, yet they're lining up to get the money. So that's not a surprise to me. That's par for the course. But it's just amazing. And then the other thing that we're probably never going to get to is the amount of fraud and abuse that is going to take place with this. I couldn't even guess how much fraud and abuse how much is going to be stolen. How many quote-unquote companies have been created to take advantage of this? Right? I mean, what's a corporation? A piece of paper that's filed. Okay? Now, that's not supposed to happen. It's not supposed to happen, but a lot of things aren't supposed to happen, and they do on a daily basis. It's who do you know? What do you know? You're going to look the other way. Is this ever going to really be enforced or policed? What are the fines? Are there going to be fines, penalties, imprisonment? What would really happen? People don't care. People feel like they're above everything. It's an election year. You got a pandemic going on. They'll never look into me. Just the amount of fraud and abuse is going to be rampant. Rampant. And of course, if and when any or all of these loans are forgiven, meaning they become grants, well, just tack it on to the national debt, because there is no free lunch. You got it? So everybody else is going to be paying for this, which is why I always try to use that metric. How much are we spending per job? Right? We borrowed net $3 trillion during the second quarter. Just the $3 trillion. And if you took that against the 40 million Americans who filed for unemployment insurance, it came out to what, $80,000 per job? Then you look deeper into the jobs lost. Most of those were not even close to $80,000. So does it make sense? No, it does not make sense. That's why you do not do these bailouts. You don't do them. It also gives a breakdown, approval by state, gives you a heat map where everything's going, jobs reported by state. You can look into that. I'm not going to bore you with those details, but interesting to look those up. What else do we have? They break them down further. You also have a breakdown by industry. They break this down and order it by the net dollars that have been loaned out. The top recipients are in healthcare and social assistance, representing about $67 billion. Then you have professional, scientific, and technical services, representing about $66 billion. Then you have construction at about $64.5 billion, manufacturing at $54 billion, and then you have accommodation and food services at $42 billion, retail trade at $40 billion, and then the list continues downward. Lender type by diversity, that's a breakdown of who was lending the money. The vast majority comes from banks, $497 billion, and then a further breakdown, credit unions, savings and loans, farm credit lenders, and micro lenders, etc. And that's pretty much all I wanted to focus on when it came to this report. It gives you a further breakdown of the top lenders: JP Morgan Bank, Bank of America, Truist Bank, PNC, Wells Fargo, yada, yada, yada. No surprise at all that that's the case. And then when you look further too, you have these banks are going to make a ton of money with all of the fees that are associated with these loans. It's great to be a banker, isn't it? They just can't lose. Can't lose. It's unbelievable. And I tell you, When is it ever going to end? It's not. It's not. That's why we had yesterday's podcast, How Much More? Because it's not going to end. There's already, leaks being thrown out there in the media that there's going to be at least another $1 trillion in quote-unquote stimulus spending before Congress goes on recess. Again, they're constantly on recess, but before they go, it's going to be another $1 trillion. It might be 2, might be 3. Who knows? It's an election year. Nobody wants to look bad. They're going to cut the payroll tax. They're going to do more loans. They're going to extend the $600 if you're collecting unemployment insurance every week. Are they going to do another stimulus check, another $1,200, another $2,000, $5,000, $120,000? What number are they going to come up with? I don't know. It's going out of style. We don't have it. We're broke as a joke. But they're going to keep printing it as if that's a panacea. And then lastly, with this report, amount of funding remaining stands at about $132 billion. And don't forget, folks, Congress had to come back and approve even more funds for this program because those few $100 went out the door immediately. Immediately. And again, this was for the smaller, mid-sized corporations, businesses. Hundreds of billions, trillions to major corporations, no problem. But take your time when it comes to bailing out Main Street and small businesses. That's how it works. That's the system we have. That's why I go on my rants. Because this is ridiculous. How are they getting away with this? Because they can. That's the answer. Because they can. Because nobody's going to stop them. Democrats aren't stopping them. Republicans and fiscal conservatives aren't stopping them. The President of the United States isn't stopping them. They're all in it together. It's one big club, folks. We ain't in it. But we're getting hit over the head every day with that club. And we nod and we take our orders and we say, well, if I can get an extra $600, I really don't care what they do. If I get an extra $1,200, I really don't care what they do. And that's exactly what they want. They want to pay us off. They want to bribe us. And apparently, we can all be paid off and bribed because nothing's being done about it. And the sad thing is, on the other side of this, and I hope I'm wrong. I really do hope I'm wrong with this. But on the other side, we're going to get inflation. We're going to get stagflation. We might even get hyperinflation. And don't think that it can't happen here. Because I'm sure a lot of you were highly skeptical when I said we were going to have protests and riots in this country, that they'd be coming to a theater near you when I said that months ago. I said, that's not going to happen. That's going to happen in Lebanon. That's going to happen in Iraq and Iran and Bolivia and Peru and Hong Kong. It's not going to happen here. And now it is. Talked about Lebanon with food prices going up 100% over the past 2 weeks. Don't think that these things can't happen here. Because they can. Don't want them to. I don't want $26 trillion in debt. I don't want $4 trillion deficits, but we got them. They're coming, and they're not going away. I don't want to live in a banana republic, but I do. But I do. That's where we are. That's what this country is now. We've gone from a constitutional republic to a banana republic. It only took a couple hundred years. It took a country from principle to a country of convenience. That's not how we are going to build the future. If you have a weak foundation, that's all you need to know. That's it. It cannot stand. It cannot stand. And that is what we are witnessing, and that's what we are going to be witnessing. This is a process. This is going to take time. But these jokers, they just keep getting away with it. They just keep getting away with it. And you have to understand, you have to come to the realization that it's both sides. It's Republicans and Democrats. They don't care. It's one big club. 96-0, no votes for America. Nobody stood up. Nobody said enough's enough. Now, as we get closer to November and the election, some people are going to stand up and say, yeah, well, I was against it the whole time. How'd you vote? How did you vote? Talk is cheap. What did you do? What have you done? It's a joke. That's why I'm not voting, because it's one and the same. Nobody's talking about the structural issues that we face. Nobody's talking about the 10,000 baby boomers who are reaching the ripe age of 65 on a daily basis from now until the year 2030, and how we are going to fund Social Security and Medicare, which are both going to be insolvent. Nobody wants to talk about any of that. Nobody wants to talk about how we continue to increase our spending on defense and on war. Nobody wants to talk about that. Nobody wants to talk about the increase in the interest expense that we have to pay on our debt. Nobody wants to talk about the structural issues. No, let's talk about having to wear a mask or not wanting to wear a mask, and let's talk about statues. That's front and center. That's really what matters here in the United States of America. Whether or not I can wear a mask or should I, whether it's tyranny if they make me do it, or if they're burning down a statue. That's what's most important here in this country. That's why this is a banana republic. That's why we're going in the wrong direction. Because people are too easily distracted. And that's exactly what they want you to be, distracted. They want you divided. Because it allows them to run away with the loot. And that is exactly what they're doing. Corporate debt to the rescue? I don't think so, but time will tell. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.